Okay, peeps, welcome back. So today we're going to be going over the YieldMax's underlying big tech stocks for the week with some technical analysis. Let's get it. So why are we bringing this up? Why is this important? Well, it's pretty simple. If you're looking to buy into the YieldMax ETFs at the optimal price, you really want to know what the underlying stock is doing. Reason being, we'll give you an example here. So as you can see pretty much immediately on the chart of Apple, Apple has had a green week, but again, it is approaching all-time highs and also resistance. This could be considered to be a double top. If you're bearish on this and saying, okay, this is a double top, it's going to sell back into this support between 172 and 184. I want to wait and buy until that support zone. If you're bullish, basically what you would want to see is a follow-up next week. Green candle close above this resistance zone, and then basically come back and retest and then move higher from there, and it would turn or basically flip resistance into support. So that's why that matters, because the YieldMax ETFs basically track the price movement of the underlying stock. So that's why that's important. So with that being said, let's get into it. So you can see we have our support zones drawn out here. The most relevant ones, as I just mentioned, was support is at 172 to 183, resistance 194 to 198. So in terms of Apple, basically, I think at this point we're just going to hold. We're not going to buy or sell because we want to see what this is going to do first. We're also not in profit in our positions. I think we bought all the way back here and then we kind of got dumped on, so that sucked and we didn't really buy anymore. But we also have told you guys that for each dividend stock that we have or dividend ETF that we have, we want to build that position up to pay us between $25 to $30 a month. Is a pretty comfortable first goal. So with all that being in mind, you guys can kind of make your own conclusion on this one. But if it breaks past all-time highs, it wouldn't surprise me because Microsoft has already done so. So we'll just have to wait and see. So moving on to Amazon. As you guys can see, we're still holding this uptrend level here. We are currently sitting at some potential macro resistance. If you move back on the chart, you can see this whole zone here previously was support and it was holding above, kind of chopping around in between these zones. And then we broke through, came back, retested, sold off, and now we're back at this resistance zone. So if we break through, we'll move up to the next zone. If we don't, then, well, that would not be good. So we basically just go back down to this level down here, which, if I'm being completely honest, I don't think that's going to happen. I mean, the RSI and the MACD look bullish. They're both in the bull territory, so we'll just have to wait and see. Plus, you have some candle closes above these highs here. That's generally bullish, but we have not broken the zone yet. So the current resistance zone, or I guess if it was going to flip into support, would be support between 137 to 150 and 172 to 191. How I would play this one is I would just simply DCA into Amazon, or AMZ in this case, and kind of wait to see what it's going to do. I wouldn't necessarily go all in at these prices, not financial advice. So now taking a look at Coinbase, which is, for this one, it would be Coney on the YieldMax ETFs. You guys can see that immediately that the RSI is massively overbought. The last time we were, well, actually, I guess we were never at these levels because Coinbase had its IPO during the bull run. So unfortunately, we don't have enough data to go on that. But you can see the RSI is more bought than any other time in history. We are approaching resistance. You can see it previously tried to act as support here, got rejected off the higher zone, and just snapped straight through the support zones. So the current support zone right now is 105 to 113. Resistance is 148 to 173. We did say we want to pick up 10 shares of this, and we're going to do that. But we are kind of expecting a pullback at this point because, I mean, as you guys can see, this thing has really just ripped hard. I mean, you're talking 6 weeks in a row of nothing but green, no pullbacks, just 6 green weeks. That's a pretty large move to not have a pullback. We're talking about 100%. So kind of expecting a pullback in the immediate short term. We'll have to see how that one plays out. So now going on to Google. As you guys can see, Google does actually look pretty bullish. So this zone that we're in right now was previous support, flipped into resistance, and now it's flipped again into support. We are holding this key trend line here dating back to earlier this year, as you guys can see. So the current support level is 125 to roughly about 132. Resistance is 145 to 155. If I'm being completely honest, I think we're probably going to pick up some shares of GUI this week, which is the YieldMax version of the Google ETF. Reason being is because it looks pretty likely that this thing is going to bounce off of this support zone and head up to somewhere between 145 to 152, which is the previous resistance, and also would be roughly around all-time highs. Now going over to Disney, the first most important thing I want to point out on Disney, and just so you all know, they did start paying a dividend again. For those of you guys that don't know, you can go to look it up yourself, go onto the NASDAQ.com or type into Google like Disney dividend or something like that. You'll see it for yourself. But you guys can see the support zone we're at here has been major support for pretty much a decade at this point. So in my opinion, Disney is at a golden buying opportunity. We did break this downtrending, massive multi-year downtrending resistance line. I don't know why I have this as green. It should actually be red. Sorry about that. Well, I take that back. Actually, it should be green now because it has confirmed a breakout. But so we may be taking a look at picking up some shares of DISO based on these technicals. So the support zone is between basically 80 to 90. Resistance, most current resistance is between 114 to 120. So that's a pretty large upside. If we take a look at just the current price to the potential resistance zone, you're talking about a 30% move. That is not a small move for any stock, just so you all know. When we look to take profits on swing trades on stocks, not on crypto, we usually look for about a 15% gain. Okay, so that's double what we would normally look for. So now moving on to Meta, I would say that we're not necessarily bearish on Meta, but as you guys can see, it's pretty close to that resistance. But if we were going to buy this, we'd want to see a pullback into the support zone. It is fortunately still in a bull trend, so that's good. But again, I mean, this thing is not that far away from all-time highs. And as you guys can see, we just came from being overbought on the RSI. And there was some bearish divergence. You can see the RSI going down here, but the price is moving up. So I'll just draw that in real quick. Let's see if I can find where the price currently is. So yeah, you guys can kind of see that bearish divergence coming in there. So that's not necessarily a good sign. Last time we were overbought, we hit the same resistance zone and we absolutely tanked about $300 a share. So that's something to keep in mind. I would say if we were going to do this, we would basically DCA our way down into this support zone. That's kind of how we would play Meta. Microsoft MSFO. It is overbought on the RSI. Last time we saw this, well, we didn't really see a sell-off, honestly. But if you look back here in 2021 at the bull market peak, you guys can see this RSI did hit pretty much all-time highs, and we had this huge sell-off here. So I would say that MSFO is bullish, if I'm being completely honest, because this resistance has now turned into support with MSFO, or Microsoft, I should say, hitting new all-time highs. So basically what we'd be looking for is for it to come back down to the bottom of the support zone, then maybe start DCAing in. That's what we would do with Microsoft. Netflix, this one's kind of interesting. So it is bullish on the indicators. We did have a golden cross here at support. But I don't know. I mean, this one's a little hard to read. So you guys can see here that we have this resistance cluster here. It's trying to bounce off of that, but at the same time, we also have major resistance up here where these candle closes are. You can see all these candle closes on the left here, and then you have this candle close right here. So I would say it's still trying to figure out where it wants to go. It's basically stuck between those two zones, bullish and bearish. We would probably just wait on this one and look to buy down here at support, or maybe DCA into the support. So NVIDIA, we're going to talk about this one, or NVIDIA, I should say. So you guys can see it was overbought here, and we are kind of what looks to be having like another bearish divergence. So price moving up, RSI moving down. So NVIDIA is another hard one to read. This one's not really sure where it's going. It looks bullish on the RS or the MACDs and the price, but again, we do have kind of a triple bearish divergence going on here. It doesn't necessarily mean the stock has to dump, but do understand that that is there. So the previous support is between 280 to 350. Current resistance between 470 to 500. We're looking for either one of two scenarios here, either a breakout above the highs and then a retest of this resistance turns support, in which case we would start buying at support and DCAing in, or just simply waiting for a drop back down to this support zone to start looking to buy. This one's, again, this is kind of a neutral stock. It's not, I would say it's not really bullish or bearish yet. We don't really have any confirmation one way or another. So Tesla, moving on to Tesla. This one's even worse to try to read than NVIDIA, if I'm being completely honest. So you got your most recent support between 188 and 220 and resistance between 289 to 310. And it's kind of in no man's land, really. I mean, this thing is just kind of stuck. It's stuck between this downtrend line, this uptrend line here, and then you have this macro uptrend line at the bottom here, going all the way back to 2019. I would say, well, we do actually own quite a bit of Tesla, so we're just simply going to hold at this point. We're not going to buy or sell, but I would say that we basically just kind of want to wait and see what it's going to do here. You guys can do what you want to, but as for us, we're going to wait. We're not going to make a decision one way or another until we see a move. Ideally, we want to see a breakout above this downtrend line and move into the previous resistance. That would be good for the price of Tesla. So Square, this is one we talked about before. The SQUE dividend was absolutely massive. It was like over $2 a share. When we compare Coney to SQUE, you can see the clear difference here. Coney is way off its previous all-time lows, okay? And I mean way off it. It's like a 5x from where it used to be. Whereas SQUE is just barely pushing above macro support levels. You guys can see that this support zone goes like way back to 2017. So there's massive upside to this thing, and the peak obviously during the bull market. And again, I believe Jack Dorsey, who owns Square, does have like several thousand Bitcoin or something like that. Don't quote me on that, but I'm pretty sure that's the case. But you guys can see that there is huge upside here in comparison to Coney. So I would say this is pretty bullish on a macro time frame. We could potentially be definitely looking to pick some up. So support is between $40 and $54. The most current resistance is between 82 to 90, so that's a pretty large move. From current prices, you're talking roughly about a $20-ish move. ExxonMobil, we talked about this in the previous video. Oil is at this point extremely oversold, and we are bullish on it. So ExxonMobil has pulled back quite a bit, which means Zomo has. So pretty much we want to wait to see the price get into this support zone before we buy. The support zone is between 83 to roughly about 95. Doesn't mean it can't go lower. No. The prices of oil and these oil stocks could always go lower. Keep that in mind. That is a risk. So we would basically DCA in probably a certain amount of shares at the support zone and then kind of just wait to see what it's going to do. But that's the support, and the resistance is between 114 to 121. So there is some pretty substantial upside there, I would say. So now moving on to the banks. So JP Morgan Chase, you guys can see this thing is very bullish. It has pretty much ripped since the bear market lows last year. So support is sitting at 136 to 146, and 167 to 175 is up here at the peak. It's not really overbought or oversold. The MACD and the RSI are in bull territory, and you can see this thing is really ripping hard to the upside. And we did get a candle close above these previous wick highs here, so that is also bullish. So basically, we're probably not going to touch this one because it's not really at support or resistance. It's kind of just in the middle of nowhere. If we were going to do this, we would basically probably maybe plan on picking up like a share a week or something like that and watching the price. ARKK, this is one we're extremely bullish on. We've told you guys before that the Russell 2000 has more upside potential than all the other indices currently. To get to its all-time high, the Russell has to move up about 30%, to where the SPX, the Dow Jones, and the NASDAQ only have to move about 2 to 5% to get to all-time highs. So you can see we're at multi-year support here. We got our bounce off. We're moving into resistance. If we get past that resistance, I mean, the next resistance zone would be all the way up here at roughly about $100. So current support's 28 to 35. Current resistance is 50 to roughly about 54. We already saw a break of the downtrend line, so that's bullish, as you guys can see here. That's very bullish. But we also want to see a break of this resistance zone. We already have quite a bit of OARC. We kind of have been buying like in this general area, so we're probably not going to buy anymore. We'll just sit back and wait. Now taking a look at AMD. AMD, I would say, is looking pretty bullish. I mean, we bounced off this support zone here multiple times. We're currently pushing into resistance. You can see we got a pretty large green candle here off the EMAs. The other two indicators are not overbought. We're not getting any kind of divergences going on. So we'll just use this trend line as support here. We'll say, if I had to draw in another support zone, I would probably say something like this. Probably somewhere in there would be the most current support zone. You can see how many different touches we got on the candle movement over the weeks. So support would be somewhere between 102 to 111. Your downtrend or your uptrend line here is at $95, and we're currently sitting in resistance between 126 to 135. I would probably just DCA into this if it was me, and maybe potentially look at the prices either going lower or going higher. So now we're going to move on to PayPal. We're extremely bullish on PayPal. Why is this? Well, number one, they do offer cryptocurrency. You can buy and sell, I believe, Bitcoin, Litecoin, ETH, and Bitcoin Cash on their platform. They also have their own stablecoin, just so you all know. But we have this massive multi-year support here that we are bouncing off of. We have not moved into bull territory yet on the MACD and the RSI, but I suspect that we're going to, especially when the Fed reduces rates and the markets start ripping to the upside. Keep in mind, we have told you that there's record amounts of cash sitting on the side waiting to be invested because the Fed's still in their rate tightening cycle. But once that's over, we expect that money to flow back in. And then PayPal, as you guys can see, has really massive upside. The peak is at 310. The current price is only at $59. So probably just be DCAing in if we were going to in between these zones, I would say is probably the simplest and most strategic answer here. So the last one would be Moderna. This is the newest one of the YieldMax ETFs, I believe, or second newest to AIYY. Oh yeah, we do have to cover that one too. So we currently just hit oversold here on the RSI. Keep that in mind. But Moderna is looking pretty bullish. You got multi-year support that we're sitting at. So support is between $63 to $95, and resistance is 177 to 219. If we measure that move all the way to the bottom of the resistance zone, 120%, top of the resistance zone as much as 170%. Now we're going to take a look at C3AI would be the last one. So just looking at the chart, it does look pretty bullish. So we bounced off of this major support zone down here. And we also are currently sitting on support, where I should say resistance turned support here. As you can see, previous resistance, we are now coming back, retesting as support and potentially moving higher. And we did also it looks like we just got a golden cross on the MACD, so that's also a good sign. And you can see that the high on C3AI is all the way up at roughly about $180 a share. So if we were going to buy into this right now, we would just simply buy into it, maybe buy like 5-10 shares, something like that, and then DCA. Depending on what the price does, if the price moves up too much, we just simply hold our shares and maybe buy something else that's undervalued, and that's kind of how we'd play that. So Anyways, this is the weekly technical analysis for the big tech companies that reflect in the price of the YieldMax ETFs. So hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.